In the pre-Confederation period before 1867, taxation was a localized affair. Individual colonies had the autonomy to impose their taxes, primarily on goods, services and land, to fund local infrastructure and services. The absence of a centralized tax system meant the colonies had to rely on these forms of taxation to generate revenue. Fast forward to the post-Confederation era spanning from 1867 to 1914. This period ushered in a federal government responsible for national taxation, while provinces retained authority over specific tax matters. The federal government's revenue sources were quite diverse, including tariffs on imports, excise taxes on alcohol and tobacco, and income from Crown lands. The onset of World War I in 1914 led to a surge in government spending and taxation to finance the war effort. Temporary wartime taxes, including income taxes and excess profits taxes, were introduced during this period. The end of the war didn't mean the end of income taxes. Instead, it saw the gradual expansion of income tax provisions, laying the foundation for a more permanent income tax system. The rollercoaster ride of Canadian taxes continued with World War II and the post-war era, spanning from 1939 to the 1960s. The war brought about an expansion of taxation, including higher income tax rates and new taxes on luxury goods. The post-war boom led to significant economic growth and social change, leading to the introduction of various social welfare programs funded by tax revenue. It was during this time that the modern Canadian tax system began to take shape with progressive income tax rates, deductions and credits. In the modern era, from the 1960s to the present, tax reform and modernization have been the name of the game. The Goods and Services Tax, or GST, was introduced in 1991. Over the years, the Canadian tax system has continued to adapt to changes in economic conditions, social priorities, and government policies. Today, Canada's tax system is a blend of federal, provincial, and territorial taxes, including income taxes, consumption taxes, property taxes, and various other levies. Peering into the future, the Canadian tax system could continue to evolve, potentially with a greater focus on digital transactions and e-commerce, reflecting the increasing digitization of the economy. There may also be a shift towards more progressive taxation, with higher taxes on wealth and high-income earners. In essence, the history of Canadian taxes tells a dynamic and adaptive story, one shaped by historical events, economic factors, and societal needs. It's a tale of a country striving to balance revenue generation with societal welfare, an ongoing quest that continues to this day.